Yeah, so I have two different charts here. This is like um the BTC USD chart, and here's the one. So you can see on both of these, like that's what I had as my 4 hour break of structure, and that's where it hit. And I had this level here prior that we mentioned, and it hit that, and it had a small little pullback there. And then I had another one in here that I may have deleted, or I guess it was this one. And then it hit that one, and it had a little 2.5% pullback from that. And then these levels up here, like these three or four, however you want to put it, like these are the ones that for me are, like these are really what has to keep it down. If it starts coming above and closing above, if it closes above this, then that's really going to signify that it's trying to move up, but that doesn't mean that it's just going to do that. Like this thing is primed for a big pullback. And if it doesn't close above this very soon, then that's exactly what's going to happen. And more than likely, we're going to lose all these lows because, like, let's look at it on the daily. Matter of fact, let's go straight to the weekly. All right. So on the weekly, like we have, we have this high and then this low, the high, we lose that low. So then there's this low, then we have a high, a low, a high, a low, a high, a low, and we just lost all those, right? So that makes these highs like really strong, right? So now it does look like, yeah, this is strong, but you see this big blue candle here, this distribution candle.
Yeah.
Whenever you have those areas tend to be balanced, um, which was kind of like this was going to happen because of how big and sharp of a move down this was on the weekly.
Yeah, it's not like
You're
steps coming down, is it? It's like
yeah,
dramatic
you're
drops. So
typically, yeah, when that happens, like you're typically going to have something opposite to it, but it doesn't mean that things are turning around and, oh, we're going to moon from here. That's just kind of what they want you to think. I don't think that is the case. Now, if it starts closing above like these two levels, and especially this one, because this is the daily breakup structure level here. So let's go to the daily. So this high right here is what I have as the daily. Let me make sure that I don't need to adjust it. So let's check some percentages here real fast. Yeah, so out of this one, so
so
it actually
you're
it may actually be this one
working out
here.
breaker structure levels there, aren't you?
Yeah. Yeah, so that may be um the high that needs to be broken. So we got that. And then the low stays the same. The low is still here. So I bet you if we measure from here down to here, with our fib tool, we're just going to pop it over here. I bet you that is around the 75% mark. Yep, right there. Look what it's like, struggling to close above right there. And
Nice.
then if we, kind of also, if we like look at the 4 hour, like our 4 hour structure, more times than not tends to be the same as the daily. Sometimes it'll give you a little bit more accurate, and you'll see it sooner, but this is like that high, and this is the low in the 4 hour. This is why I had this level, is like where I think that if it comes to this, like it's gonna really struggle to get above that. If it does get above it and closes above it, that's a really good sign for Bitcoin, like to move up. I just don't think that that's going to happen. It's not to say that it won't sweep this with a wick and come up and hit like this level here. You know what I mean?
Yeah.
I don't see this getting closed above on like a daily or weekly or anything. Um, Ultimately, this is the area that Bitcoin needs to overcome right here between this high and this high, and close above on a daily or a weekly to signify it moving up. You know what I mean? Uh, for me, long term, because again, like if we look at the daily, like it's just this isn't a downtrend. You know what I mean? It's just a downtrend. It's come up here, so this is the first sign of strength that it's really had since all of this from here, because but look what happened here. Like you had this high, and then a lower high, and then a low, and then it started to come up and creep up here, but then like look what happened right after. Boom, it fell off the face of the earth. So yeah, I would not get too excited about all of this. Like, yeah, it was, it's a decent move up, and it's a good sign of strength. I just, uh, with everything else going on, I don't see this thing moving up um long term right now. And even if it does, it's gonna come back down to here. You know what I mean? And then it can build off of that and go up maybe. Um, but if it doesn't close above this on the daily, that's not going to happen. I mean, like, look, that's exactly where it hit. It like went just a teeny bit above it. Um,
So you think either way, it's still going to come back down to at least 15?
yeah, yeah, yes, I do. Yeah, I mean, minimally, it has to come down to, um, you know, minimally it has to come down. I thought it was going to be that right there. It has to come down to around here. um I mean, yeah, it can come down to here, but man, that's such a strong move, like up. And that was just look at this other side. Like that's just balancing this out. That's just closing that imbalance of this. Like big move down, right? Like a lot of orders were just swept out right through here.
I mean, it
And
just
then,
looks like a retest on the daily, doesn't it?
well, it depends on what you call a daily. Like for me, the daily is up here, you know, like, yeah, this is a high, but it's not the relevant high on the daily. It's this one. Like that's the relevant one,
Okay.
because this, you lost, the low here. So you got to find the high between what lost it and what it was that was lost. So here and what, what lost that low in here. What is the highest point? Well, it's this, you know what I mean? Um, and then this becomes your low, and that's what it's testing here. So you're still stuck in this range right here. These are just like they're little minor highs and lows. You know what I mean? Those are more significant on the 4 hour, which is why I have that one as the 4 hour. Because if we go to the 4 hour, that is a 4 hour relevant high, and it's what it's hitting right here. You know what I mean? So you have to, I guess we'll go over like the break of structure, like the relevant ones, but you have to look at like what was lost and what did it create. Um, that's important, but like all these little highs and lows in here, they're not. Those are lower time frames. Especially on like the daily and the weekly, like all this little stuff in here, like these aren't really significant daily highs and lows. Um, that's what comes into play with measuring our like creating a rule set for our daily highs and lows. Like, and I like to see, 24% um for like, the distance between my highs and lows. So like if I measure like from here,
24% on the daily.
yeah, yeah, typically that's, and you can, adjust it a little bit here and there, but I like to see around 24% for, for me to consider it like a daily move, you know. So like this one, like I would consider like this, like from there to there. Um, Kind of messed up on that one. Let's measure it and see. Yeah, see, like that one, I would consider that like a daily, low to high here. And it's 23.15. It's close enough for me to consider it. But I'm not going to consider this a daily low and a high. Like that's 4 hour, maybe 12 hour, but probably 4 hour stuff. You get kind of stuck in the weeds if you kind of drill into it that much and get that critical about it. And you can see it responds to those levels in which like I call relevant, highs and lows. Um, so yeah, I don't.
Because I think on the 4 hour, I've got like it down marked there as 4 to 4.5%. So that's
You got
considered
what?
the daily. The pullbacks and so on. I've got 4 to
Mm-hmm.
4.5% on the 4 hour.
Yeah,
So it's good
yeah,
to see
that's
what
yeah.
you're measuring on the
Mm-hmm.
daily.
Yeah, I kind of attribute it to, like hours and minutes. So, you know, above the daily, it gets a little bit more tricky. But like daily is 24 hours in a day. So I kind of have found roughly 24% works well. 4 hours, 4%, you know, so on and so forth, down to 15. Now as you get on the lower side of things, like below 1 hour, you kind of have to adjust your scale. But we'll definitely go over that like when we talk next, and kind of brush up on those the criteria that I personally set for each of these time frames and so on and so forth.
Yeah, excellent.
um
Thank you.
it just gives you like a rule set, so to speak. But yeah, I mean me personally, like it's already kind of showing you signs of failure. Like, look, this whole move up, it hasn't done anything like this, you know, like it came up and like bam, immediately it dropped down, came up again, bam, and then it lowered down. So like these are on like a 15-minute and a 1 hour um highs and lows right here. So like if we could go down to see, that's a 1 hour right there. And then there's the 15-minute. You see what I mean? So like it's like this was just a sweep. It was just sweeping the liquidity right here. It grabbed it, and then it was trying to come back down. I mean, I personally think that it's fixing to come down.
Yeah, it's
I
looking
mean,
like something we were looking at the other week, if you know what I mean. Um,
mm,
and it's beginning to look like that, isn't it?
yeah. To kind of wrap this up a little bit, it's I've said it. I said it a while back. Remember I had those levels where I was like, this wasn't a thing yet. You know what I mean? And like I had kind of this high and then down to this low. And if I get rid of this one there, so like if I go from that high down to this low, and then you see that's my EQ. So it breached that. Now look at this. Like, so this is the EQ on the weekly, and this is the 75% mark. If I do this again, bring it over here. If I do that again, look what it hits right there. It's the EQ of that. So that's the adjustment you have to make for higher time frames. You know what I mean? And you'd be able to find this on micro time frames, not micro, but probably 1 and 4 hour. You'd be able to find that, and it's essentially, it's just this high to this low right here. But that's just a way you can kind of find it on higher time frames to save yourself time. But you see these EQs they're really important. You know what I mean?
Yeah, it looks
And
blatantly obvious, doesn't it, when you drop that so
yeah,
low?
mm-hmm, yeah. I thought that it would line right up with that, uh, you know, and I haven't freaking charted that much in the last couple of weeks. One just being sick and you know holidays and trying to get so much stuff done, but yeah, man, like that's why I'm a firm believer in using the fib tool in that way. And on the higher time frames, you can look at the spaces in between. It's fractal, right? Like that. I mean, that's literally the nature of fractal, like relevance. Uh, it's like looking at the seashell, like the Fibonacci sequence, how it just kind of mirrors in on itself in a spiraling continuation. Um, you know what I'm saying? Like
Yeah.
what you see on like the 4 hour, like you're gonna see that on lower time frames. You just got to learn to kind of see like the highs and lows. Because like for instance, like if I like erase this there, so like this low to this high. Let me turn my thing on here. So if I mark a little box from there to there, right? Um, make that a little. There we go. Just make that a little brighter. And then if I go down, that's a low and a high. You see? And if I go down even further, it's more apparent. right? Like that was that low, and then that was that high. So that's the same thing as like what I saw in the weekly, but it's only, these two candles. So that's like seeing things fractally. Let me erase it real quick so you can see. You see, like
Yeah.
it's a low and then a high. So learning to like see those things is really powerful. It helps you to not get as confused with like the different time frames and so on and so forth. I don't know that it makes it any easier, so to speak, but I think it helps things seem not so insurmountable.
It's so
Um,
important to know the relevant levels, isn't it?
Oh yeah, for sure. Yeah, it's absolutely vital. Like that's everything because
Of course.
knowing those are knowing targets, and it's like many people have said, like, oh, there's a million levels, da 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 da. Like, how do I know which one? Knowing the
I
relevant
this
highs and
this is
lows,
why
that's how you know.
yeah, this is why I'm so impressed with your TA because you always call the relevant levels. There's loads of people on YouTube and Twitter calling all kinds of levels and
Yeah.
but time and time again your levels are always respected, which is why I love your style of TA, you know.
Thanks, buddy. I appreciate that. Um, yeah, it's for me that was a big problem with the people that I learned from, before. Is like, yeah, you have all these levels in here, and you have a multitude of time frames, and infinite if you really want to look at it in that way, like an infinite amount of time frames, and therefore an infinite amount of levels. But like, how do you know which one, right? Like, what's the important one? And knowing the relevant levels on each time frame, that's the first step, and then assigning a weight or a level of importance to the relevant levels, the highs and lows, according to their time frame, right? So like a daily relevant high and low is obviously going to be much more important than a 1 hour relevant high and low. But what you got to understand with the daily is like it could bleed past it or come shy of it a little bit, and that's where going down in the time frames to kind of zero in on those places, so it will gain you more accuracy. And also like looking in the past of things that haven't been tested, and like, are they close? If this thing is coming up like this, like what is back here, which is why I have this yellow line right here. um that could be like a definite level of inducement. And so it's a balancing act.
Yeah, there's no clear rules, is there? Because my problem
No.
is not knowing
Mm.
how to chart, whether I chart on a weekly or the daily, or I can draw me levels, you know,
It
the
depends on how you want to trade. It
what
depends on like if you're scalping, if you want like a multitude of trades a day, which I think is extremely unadvisable. I think, especially starting out, I think you should look for um, mostly swing trades, like I say short swings, or some intraday trades, but you should really look for one or two trades a day, and you should really look for like 3 to 5 trades a week, So the 3 to 5 is going to be, those are going to be your larger trades. And then, the 1 or 2 trades a day you're looking for, like, obviously some of those are going to coincide with the former, but you want to adjust that as you go down. You know what I'm saying? Like, so you want to risk less. So if you're taking, fewer trades, like you don't want to put it's like we have a saying here, like, don't put all your eggs in one basket.
Yeah, yeah,
Meaning, like,
I've
if
used that.
if you have all your eggs, and you drop it, like, they're, you're out of gas. Like, all your eggs are
Yeah.
toast.
I,
So,
I
um,
I did see a chart of a trader, and he'd mapped out the amount of trades he took as a day trader, and
mhm,
equivalent to what he was trading, say, during a week, and less
no,
trades in the week actually made him more money. He had less stop losses. He had, it wasn't
mhm,
hitting the stop loss so many times, and he was just definitely making
yeah,
more money. And I think it was something like about 30% more profit just by
yeah,
taking one or
yeah,
two trades a day rather than 10 trades a day.
yeah. That, I mean, that's what I look for. I look for I look for the 1 or 2 good trades in a day, and then I look for the 3 to 5 really good trades in a week. And sometimes it's only one good trade in a day, and it's only 2 good trades in a week. It all depends on just where we're at. You know what I mean? Just like range and just sideways, and you know, you're not going to get big giant moves all the time, but planning for those, and then if it's kind of boring, I'm using air quotes, but if it's boring, then you can take more trades in that day or in that week, but you lower your risk. Like, you're not going to put the same amount of money and the same amount of risk on these other trades that you would the one that you've been planning for days or weeks. So you have to be very dynamic when it comes to your position size, your leverage, your risk, um, and all that. Does that make sense?
It does.